Hello everyone. Today we're going to learn about how to judge good technology shares. And this is Nico from Homoly Chat. Statement: the main purpose of this course is to learn the methods and techniques of share investment. It does not constitute any recommendations or trading tips. Any risk or profit is irrelevant to the company and myself. Trade at your own risk. Okay, so for today's course, there will be three parts. The first part is about why a technology shares stronger, and the second part is about will all technology stocks rise, and the third part is about find entry point of technology stocks. Okay, so let's see the first topic is why are technology stocks stronger? And if we want to talk about strong and the weak, let's talk about what are high and low first. For example, you can see this picture, and this yellow point is the current price. So you can see it used to be very high price, maybe around 3 or 4 years, and it falls to this price. So for many investors, they may think, okay, current price is very low. But if we zoom out this chart and we find here, actually is here, right? And then maybe you want to catch the bottom, but if you see the full picture of the share, you will find actually this share is still in downtrend and you cannot see a clear bottom now. So actually it is really high. So we know high and low is a kind of relative position based on historical high and low points. So now let's talk about what are strong and weak. So they are trends based on average performance, right? Or how will you know what are strong and weak? So it's based on some average performance. In Bursa market, it should be KLCI, right? So let's see this chart. This is KLCI, and this is KL Technology Index. So we can see the chart together and make a comparison. We use indicator called homoly rainbow. So this indicator, white color stands for long-term market cost, long-term, and blue color stands for mid-long-term. Yellow color stands for mid-short term, and the red color stands for short term. So if your share homoly rainbow arranges like this, a white line is at the bottom, then blue lines, and then yellow lines, and then red lines, then we call it bullish arrangement. But if your share is on the contrary, which means white color is the highest, and then is blue color, and then is yellow color, and at last is red color, this kind of arrangement we will call it bearish arrangement. So this is bullish. Okay, this arrangement is bullish. So if we want to make a comparison between KLCI and the technology, how we use this indicator? First, let's see the long-term trend of KLCI and the technology. We need to use blue and the white color. If blue color is above white color, you can see if blue color is above white color, then the share will be in long-term uptrend. And if blue color is below white color, it will be like this. So it will be long-term downtrend. So actually, if we see KLCI, actually we cannot see blue color is above white color now, so it is still in long-term downtrend currently. Okay, and if we see technology, we find we can clearly see blue color is above white color. So for KL technology, this index is in long-term uptrend now. So in long term, which one is stronger? Technology, right? And then let's see the midterm trend. For midterm trend, we see this yellow color, right? Yellow color is mid to short term. And the yellow color we can see is direction. In technology, real color is upward, So midterm trend is upward, and in KLCI yellow color is downward. So KLCI midterm is downtrend. So midterm still technology is stronger. So that's why we invest in technology, and we can use this method, which means you can use this indicator and help you make some comparison between KLCI and the other sectors. So let's have a look together. This is KLCI and some other sector trends. This is KLCI and this is construction. So first we see the long-term trend. So we can see blue line is below white line. So for construction index, this sector is in long-term downtrend. And what about midterm? You can see midterm direction yellow color is downward, so midterm also in downtrend. So actually it's weaker than KLCI, right? Because KLCI's long-term downtrend is not so clear now, but you can see construction's long-term downtrend is very clear. And the second is consumer. Consumer sector also first we judge its long-term trend, white line and the blue line. You can see blue line is below or white line, so this share is in long-term downtrend. So it's weaker than KLCI because KLCI's long-term downtrend is not so obvious now. And second, we see the midterm direction. Midterm direction, we see the yellow color. So you see yellow color is downward, so midterm downtrend. And the next one is finance. Because finance actually is very similar to construction. Long-term downtrend and the midterm downtrend weaker than KLCI, right? And then this one, plantation. Plantation, its movement used to be very close to KLCI. We can see when the KLCI is in long-term downtrend, plantation is in long-term downtrend, and when you can see it's getting flatter, and this one is getting flatter also, which means they are more close. The lines are more close to each other, but the difference happens recently. We can see here. We can see here when price is in sideways here and the price is in sideways here. The difference is that if you see KLCI, we can see actually KLCI breaks down the support, and now it's in rebound, right? But if we see plantation, we can see plantation break through the resistance, and actually it gets support from the blue lines and the white lines, which is a good thing. So recently plantation actually is a little bit stronger than KLCI. And the next one is industry product. Industry product, we can see. Okay, so if we see long-term trend, we can see long-term trend they are similar, because from obvious long-term downtrend to still long-term downtrend, but not that obvious. You can see, and then if we see midterm trend, they're different. KLCI is in midterm downtrend, but industrial product is in midterm uptrend. Now, so industry product is a little bit stronger than KLCI now. And the next one is property. Property is weaker, right? Because you can see long-term downtrend and the midterm downtrend. Midterm, you see the yellow color's direction. And the next one is our technology. So you can see technology is stronger in long-term trend and stronger in midterm trend, stronger than all the sectors we have just seen. So you can make a comparison now. Now you know the reason, right? And the next part is about will all technology stocks rise? Actually, we don't know, right? But how we choose some strong stocks? We need to make a comparison between sectors, index, and the stock trends. So the upper chart is KL Technology, and the lower chart is some individual shares. Some individual shares. So we can say actually in one sector there should be some good shares and weak shares, and by comparison we should choose strong shares. Maybe some investors they are willing to choose weak shares because they think strong shares they have already risen so much, so I should buy some stocks haven't risen yet. But the fact is stocks develops according to its trends. So for example, if you buy this kind of share, you can say this is a technology share, and the long term technology is uptrend, but for this share long term is downtrend. So for example, you buy here and then you hold it here, the longer you hold the more you lose. So that's why we should do some strong shares. Okay, so you can see this share is in long-term downtrend, mid-term downtrend, right? So it's weaker than technology index. And the second kind of trend is like this. So long-term uptrend, right? You see the same long-term uptrend, but mid-term downtrend. You can see technology is mid-term uptrend, but this individual share is mid-term downtrend. So which one is stronger? This one, right? Still sector index is stronger than this share, and this share actually is not very active because you can see the candlestick, no movement of the candlestick. And let's see this share. Also long-term uptrend, right? And the mid-term downtrend. But why this share is a little bit better than the previous one? Because it's more active than the previous one. You can see the candlestick is very normal. Now the candlestick is very normal. And this one, of course this one is better because you can see it follows the index absolutely. Long-term uptrend, mid-term uptrend. Long-term uptrend, mid-term uptrend, right? We should operate this kind of stock. Okay, and so we mentioned DNO and 0018. So let's see these two shares. So for this DNO 7204, we can see long-term uptrend, right? The same, and the mid-term uptrend, So okay, right? At least this share is not the weak share in technology sector, right? And what about Lambo? So we can see long-term uptrend of the technology index, but for this share, you can say long-term actually still in downtrend. Long-term is still in downtrend. You cannot see its uptrend clearly, and the mid-term downtrend, and the share is not active. So many persons they want to buy the share. For example, they buy here and they hold all the time, but they ignore the fact that this share is weaker than technology sector. Okay, and here are some risks about investing in penny stocks. So first one is volume is very low, which increases the difficulty of exit. Sometimes you need to maybe reduce the selling price to attract the next buyer. And the market value of this kind of share is very small, so it will be easy to be operated. And there's a little information on penny stock, which makes you difficult to do some decision, and the historical performance of such companies is generally poor. So we need to pay attention. To this kind of stocks, some penny stocks, especially if you hear this kind of stocks through some media. And the next part is about find the entry point of technology stocks. So I know many persons they want to hear this part, but why we put this part in our third part? Why? Because some persons they do not select the stock, they do not filter stocks, they just don't want to chase. For example, they just don't want to chase the movement when the market is open, and they only focus on some online, some real-time software, but they ignore learning and filter. That's unreasonable. For example, just like we mentioned, many people trade Lambo, but is that share a share you should trade? Actually, you shouldn't trade, right? So for that kind of stock, if you analyze first and then you find, okay, I never find entry point on that kind of share, right? So uh, and this is about the nature of trend continuation. So if we want to know whether a trend of a stock will be continued, we need to see who is controlling the share. And we know in share market there will be two parts: retail investors and institutional investors. And among institutional investors, according to its operating style or the amount of money, we divide them into two parts: some big institutions and some small institutions. So if big institutions, we call them bankers, and red color is bankers, red color. And if they are small institutions, and then we call them hot money. Hot money is yellow color. Yellow color is hot money. And if it's retail investors, we use green. We use green color to stand for retail investors. So we can see this is D and O, and it used to be many retailers in, but gradually bankers in, and here a lot of bankers in. So for this kind of share, we find entry point. If your share is controlled by many retailers, do we find entry point? No, of course not, right? And so how to find entry point? We can cooperate with some short-term indicators. For example, this indicator is called red and the white circle. Red and the white circle, CIRCLE. So the first red circle is our entry point, and the first white circle is our exit point. So this first red circle is our entry point. The first white circle is our exit point. So we can do some short-term trading in this kind of share. And I know maybe some investors will ask, oh teacher, what if today banks in and gradually bankers go out? Then I will maybe I will lose money, and why I use your software. But actually we need to know, if I give you two shares, one is full of bankers and the other is full of retailers. One you think, okay, so many bankers, what if bankers run tomorrow? And the last one is, oh, I'm waiting for bankers, when bankers will come. You think which one you will have higher probability to win? Of course with bankers, right? And if bankers leave, we leave also. Of course, according to some trend indicators. Okay, and for example, now we trade in short term, and the first red we can entry, and in the future, if you see the first white color, then you can exit. So this is in daily chart, and in 60-minute chart. Okay, in 60-minute chart, first red color you entry, and the first white color you exit. So can you make money or not? Of course you can, right? Though it falls so much today, but you can still make money. So according to this, we know 2 points is very important. The first one is you need to have an operating standard. For example, if you trade in 60-minute chart, okay, then you should have already sold today. And if you trade in daily chart, okay, you still hold the share. And in the future, if you see white color, then you leave. And the second point is that cost is really important. So many investors, they want to, for example, trade here because they see, oh, the share rate is so good. I want to chase high. I want to chase high here. Actually, in share market, you can do anything. No one can stop you. This is the truth. But you need to pay attention first. If you chase here, your cost is much higher than the person who buy here. And the second is, what if in the future the stock starts to fall? You need to know when you should exit and when is your stop loss point. So this is about trading method. That's all for today, and this is Homoly Cha. Our investment philosophy is index first, stock next. Long-term first, short-term next. Operator familiar. If you like this video and then you want to see more video, please subscribe Homoly Chat Malaysia. Thank you.